Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening with electric vehicles and also to discuss the astonishing news that a Chinese electric vehicle manufacturer that you've probably never heard of, called ZEEKR, listed its shares in an IPO in New York on Friday the 10th of May, valuing the company at over $5 billion and raising over $440 million. And the reason that you've probably never heard of ZEEKR is that at the moment, it only sells its cars in China. So once again here, we're talking about a business that's entirely based in China, listing its shares in America, which doesn't really make a lot of sense. You would have thought that a company that's entirely focused on China should have been raising its money in Shanghai, because that's the market that knows it's best. And also, when you take into account the USA has introduced a variety of tariffs against Chinese electric vehicles, basically because they believe that there's overcapacity in China, that the Chinese government is subsidizing a lot of these electric vehicle manufacturers and allowing them to sell their vehicles below cost price around the world to basically take market share and potentially put some of the other manufacturers out of business. So this IPO doesn't really make a lot of sense. And also, if you've been following my channel, you'll know that over the past few years, there has been a checkered history in terms of Chinese businesses listing in New York. And two of the examples that I've discussed in videos previously were Luckin Coffee, which was a startup Chinese coffee chain similar to Starbucks that rolled out across China, but weirdly listed its shares in the USA. And it turned out that all of the figures were fabricated, and that business actually went bankrupt, and all of the investors in the US lost all of their investment. And also, there was another business called Didi, which was basically the Chinese equivalent of Uber, which had the majority of its business in China and Asia, didn't have any operations in the USA, also listed in the USA, raised a huge amount of money, around $4 billion, at a valuation of over $60 billion. And 4 days after that listing took place, the Chinese authorities launched an investigation into the business, which ultimately led to it delisting from New York and left investors with around $2.8 billion of write-offs. So we've got a really interesting situation here where yet another Chinese business that doesn't have any operations in the USA has decided that the USA is the best place to go to raise money from investors. So we'll talk about exactly what's going on with regards to ZEEKR. We'll talk about what's going on with regards to general electric vehicle manufacturing, because this is a very difficult time if you're in that market. If you've been following the Tesla share price, you'll know that they're down significantly, and also Tesla has been announcing redundancies and the closure of its charging systems. So we'll talk about exactly what's going on with Tesla, which is the world market leader. We'll have a look at which other brands are also suffering. We'll also talk about why there's a falling demand for electric vehicles right now, why consumers are concerned about abandoning combustion engines and going all in on electric. And then finally today, I'll wrap up with my summary. So what I think is happening with regards to electric vehicles, what's likely to happen over the course of the next 2 to 3 years, and what all of this means for the potential share price of the newly listed ZEEKR. But before we get started on all of that, I'd like to say once again, thank you so much for supporting the channel. If you've bought me a coffee or sent me a YouTube super thanks recently, thank you for the time and effort you've taken to do that. Really, really appreciate it. And if you're a long-term supporter of the channel, thank you. I really, really appreciate that long-term support. Keeps me motivated, keeps me focused, keeps me making more videos. So thank you so much.
Chinese electric vehicle maker ZEEKR prices its U.S. initial public offering at the top of its indicated range, raising $441 million. The premium brand of Geely upsized its IPO to sell 21 million American depositary shares at $21 per share. This gives the company a valuation of about $5 billion. That is a climb down from the $13 billion it was valued when it raised $750 million from new and existing investors last year. ZEEKR's IPO comes amid a fierce EV price war in China that has undercut profits, leaving a number of companies to pursue expansion outside of China. ZEEKR will make its debut on Friday under the ticker name ZK, marking the first major U.S. listing by a Chinese firm since 2021.
So the Chinese electric car manufacturer ZEEKR is now a fully listed entity in the USA, despite the fact that it doesn't have any representation in the USA, it doesn't have any facilities in the USA, and in fact, it doesn't have any sales in the USA, nor is it likely to have any, given the fact that there are some severe tariffs applied against Chinese electric vehicles imported into the USA. So all of this seems a bit strange, and especially when you take into account the history of Chinese businesses listing in the USA that I talked about in today's video. And in fact, ZEEKR is the single largest Chinese IPO that's taken place in the USA since the DD IPO in 2021. And as I mentioned earlier, the DD IPO was an absolute disaster for American investors because 4 days after the company was listed at a valuation of $67 billion, raising over $4.4 billion from US investors, it was hit by an investigation from the Chinese authorities, which led to the company having to delist from New York, leaving investors nursing a $2.8 billion loss. So essentially, when you take a step back and look at what happened, DD raised $4.4 billion. It then paid back a slither of that to investors and disappeared off with all of the cash. And the concern here really is that this could happen again, that Chinese companies are coming to the USA to raise capital because firstly, they may struggle to raise that amount of capital in China itself. And secondly, there's less risk in terms of Chinese investors because all of the money will be raised from international investors. Now, in terms of answering the question as to whether or not this is a good time to be investing into electric vehicle manufacturers, let's have a look at what's happening to the share price of some of ZEEKR's competition. This chart shows the movement in the share price of Tesla over the last 12 months, and Tesla is the world's largest and most successful manufacturer of electric vehicles. And what this shows is that over the last 12 months, there has been a significant downward trend in the share price. In July 2023, the share price hit a last 12-month high of $293. However, the share price at the time of making this video was $172, which represents a fall of more than 40% over the last 10 months. This chart shows the movement in the share price of Rivian, which is an electric truck manufacturer famously linked to the Amazon trucks, which was listed via a very high-profile IPO in November 2021 at a share price of $78, which raised more than $12 billion and valued the company at $67 billion. However, as you can see, the share price since listing has absolutely tanked, and today the share price is sitting at around $11, which represents a fall of more than 85%. This chart shows the movement in the share price of Lucid, which is a US-based luxury electric car manufacturer, and Lucid listed its shares in the USA via a SPAC merger, a special purpose acquisition company, that was very popular at the time of the listing in July 2021, and at that time the shares were valued at $25.24 each, and the current share price represents a fall of around 89% in the share price since it was listed. And this chart shows the movement in the share price of XPeng, which is another Chinese electric vehicle manufacturer that was listed in the USA via an IPO in August 2020. And at the time of the listing, the shares were priced at $15 each, and the company raised a total of $1.5 billion at the time of the listing. And as you can see, the current share price is around $8, which means that the shares have lost over 46% of their value since the IPO. So I think the takeaway from that analysis is that investing into electric car companies at the moment looks like a high-risk venture because the share price for all of those companies has tanked over the last 12 months. Any investors that put significant amounts of capital into those businesses over the last year or so will now be sitting on significant losses. So why is this a good time for US investors to be investing into a Chinese car company? That is the real question for today's video. Well, before we get started on that question, let's have a look at what's going on with electric car sales. This chart shows the global volume of electric vehicle sales between March 23 and March 24, and the colour coding here is split into different regions. The black section at the bottom, represents EV sales in China, which is by far the largest market. The blue section above it represents sales in Europe. The light blue section above that represents sales in the USA and Canada. And the dark blue section at the top represents the rest of the world. And what this chart shows is that between March and December 2023, there was a consistent increase in the volume of sales. And that increase was predominantly driven by a large increase in the total volume in China. However, there was also a steady increase in the total volume in Europe, the USA, Canada, and the rest of the world. If we now have a look at what's happened in the first quarter of 2024, you can see that there was a shift in terms of the pattern, and there was a significant fall in the total volume of sales in January, predominantly driven by a large fall in China. But there was also a fall in Europe, the USA, Canada, and the rest of the world. This trend continued in February, when there was a further significant fall, and then in March we have seen a bounce back. Now, part of this is actually related to what happens in China in January and February. It's the New Year period, and a lot of factories close down and a lot of people go home to where they were born. And as a result of that, there is a seasonal fall in the sale of cars. However, the overall figures for the first quarter of 2024 have been disappointing, and the growth in the sale of electric vehicles is definitely slowing down. This chart shows the global market share of the 10 largest electric vehicle manufacturers in 2023. And what this shows is that the market was dominated by two brands. Tesla is currently the world's largest brand, holding a 19.9% share, closely followed by the Chinese brand BYD, or Build Your Dreams, which holds 17.1%. The third largest brand is another Chinese business called GAC Ion with 5.2%, followed by another Chinese company called SAIC GM Wuling that hold 4.9%. Volkswagen has a 4.6% share, followed by BMW at 3.6%, Hyundai at 2.9%, Mercedes-Benz 2.6%, the Chinese firm MG has 2.3%, and number 10 at the moment is the South Korean business Kia with 2%. And this chart shows the quarterly delivery of vehicles by both Tesla and BYD, dating back to 2022. Tesla is shown by the red line and BYD is shown by the orange line. And what this shows is that in the first quarter of 2024, there was a significant fall in the delivery of vehicles for both Tesla and BYD. And it's recently been reported that in April, Tesla's sales fell by 18%. So why are the sales of electric vehicles starting to slow down? Well, this really relates to the movement over into the mainstream. Up until now, the people who've been buying electric cars are early adopters, people who like to take on technology in a relatively early part of its phase. These are the people who had iPhones before everybody else. They moved on to all of the latest, greatest technology. They like to be at the cutting edge. And electric cars have been fantastic in terms of satisfying that slightly smug feeling that you get when you're driving around in your car that doesn't use any fossil fuel, and you can look down on all of the people who are still using internal combustion engines. But the problem that electric vehicles face is that move over into the mainstream, persuading the vast majority of people that they should be buying electric rather than traditional cars. And one of the main reasons that's holding back the vast majority of the population from buying an electric car is what's called range anxiety. And this is basically being worried that your car is going to run out of charge. Now, the range on cars obviously varies depending on the size of the car. And the bigger the car, the bigger the battery, and therefore it usually has a longer range. But when you're driving one of these cars, you get something on your dashboard which shows you exactly how many miles you've got left on the battery. And what drivers are tending to do is focus in on that number and become very worried about whether or not they're going to run out of juice. And of course, in a car, there are a lot of different things that can start using up electricity. So if you're driving at night and you have to put the lights on and maybe it's cold, so you have to put the heating on, or maybe it's too hot and you put the air conditioning on. And if you want to listen to the radio, that's going to use a little bit more electricity. And if it starts raining, you need to put the windscreen wipers on. That will use more electricity. If you want a heated seat, then obviously that uses power. And there are lots of other things that can start to drain the battery. And one of the other things that can drain the battery very quickly is if you start accelerating. So if you start going faster than the recommended speed, then that uses more power. And what you can see is your range starts to go down really rapidly. And this causes anxiety because people start to become concerned that they're not going to make it to their destination and they'll have to stop off and recharge the car. And this isn't the same as stopping off at a filling station and putting in some more gasoline. If you stop to recharge the car, you're going to have to wait for maybe 20 or 30 minutes or maybe an hour or longer. And for most people, you don't want to break up your journey and have to sit there charging the car. So that's one of the biggest factors that's holding people back at the moment. I think if the car companies were able to develop a range of maybe 1,000 miles, then we would have a mass movement over towards electric cars. But as it stands at the moment, with the ranges that are on the majority of cars, people are concerned that the range won't be good enough, or they'll need to keep charging the vehicle in the same way as a lot of people have anxiety about their mobile phone. They're constantly plugging it in to keep it up at that 100% level. Now, one of the other things that's holding people back from moving to electric cars wholesale is related to range anxiety, and it's actually having enough charging points to be able to charge your car. And again, if we look at the people who've bought cars so far, the majority of people who've bought an electric car either have their own home or the ability to charge at home. So you may have a driveway or easy access to a charging port, which means that it's easy to be able to plug your car in when you arrive back home, leave it on charge overnight on a nice slow feed, and then it'll be fully charged in the morning. But obviously, a lot of people around the world don't have that ability. If you live in an apartment or an area where there's no parking, then it's going to be very difficult to be able to charge your car because you're going to need to leave it on the street, and then you'll need to find an available port to be able to plug it into. And as more people move over to using electric cars, demand is going to rise for those charging ports, and so we need to see a huge increase in the supply. And interestingly, Tesla, which is at the forefront of introducing chargers, what are called superchargers, recently laid off their whole charging team. Elon Musk decided to get rid of them all. Now, subsequently, there have been news articles saying that he's rehiring those people. So it seems to be a very confused situation over at Tesla right now. But Elon Musk has said that the introduction of more charging ports will be slowed down because it costs a lot of money to actually put all of that infrastructure in place. And Joe Biden has signed off on a budget of $7.5 billion to improve the charging network in the USA. But until that network is in place globally, there will be resistance for people moving to electric cars, because the last thing that you want to do is get into your car and either find that it doesn't have any charge, or it hasn't got enough charge to get you where you want to go, and that you can't use any chargers in between. So this again comes back to range anxiety and people not being confident that the infrastructure is currently enough to be able to support the number of cars on the road. One of the other factors that's causing reluctance for people to buy electric vehicles is the cost. Now, historically, the cost of electric vehicles has been quite high. It's been higher than traditional cars. And in some countries, there have been huge subsidies that have been applied by the government to encourage people to move over to electric. So basically, you're getting a reduction in the price that's funded by your government. Now, the price of electric vehicles is actually coming down. That's one of the issues globally right now, that China is producing huge volumes of these electric vehicles and they're trying to sell them all around the world. And as we talked about earlier in today's video, the USA has now introduced a tariff to make Chinese vehicles more expensive in order to enable American car producers to be able to compete on a like-for-like basis. So the actual purchase cost is coming down. However, the other costs relating to electric vehicles are moving around, because the other two costs you need to bear in mind are the charging costs. And historically, everybody talked about the fact that electric was much, much cheaper than fossil fuels. However, the cost of electricity has risen significantly over the course of the last 18 to 24 months. So that's increased the actual amount of power that you're using. But the other major cost that you need to bear in mind when you're buying an electric vehicle is what is the residual value. If you buy a traditional car for $50,000 and you have that car for 2 years, and at the end of those 2 years you sell it for $30,000, it's cost you $20,000 over those 2 years, so on average $10,000 per year. And one of the major problems that's now being reported about electric vehicles is that their residual value is falling rapidly. So you might buy an electric vehicle for $50,000, but in 2 years' time, rather than that car being worth $30,000, it might only be worth $15,000 or $10,000. Firstly, because there's huge reductions on the initial purchase price for new vehicles that are now being announced. So Tesla have cut their prices. A lot of the Chinese manufacturers have also reduced their prices. So that's driving down the second-hand value of vehicles. But also, as with mobile phones, the more you use the batteries on cars, the more times you charge them up, the likelihood of encountering battery fatigue, where basically your battery will not charge up to 100% anymore. Maybe it will only charge up to 80% or 70% of its initial value. That means that the range of that car reduces, and therefore you need to charge it up even more. And the more you charge it, the more you run the risk of that battery deteriorating further. And there comes a point for all electric vehicles when the cost of replacing the battery is actually more than the value of the car, and so it becomes a complete write-off. And that's one of the concerns, I think, for people who are buying electric vehicles, is that they haven't been around long enough for people to know what the long-term value is. How much is this car going to be worth in 7 years' time, in 10 years' time, in 15 years' time? Because with traditional combustion engines, you know exactly what the life of that vehicle is going to be, and it's going to have some sort of residual value. With electric vehicles, nobody really knows, and that's causing people to be cautious and therefore hold off on buying the cars. And one of the other main issues that people are concerned about is what happens when your electric car goes wrong. Now, with a traditional combustion engine, you know exactly what to do because cars have been around for around 100 years, and so there's an established network of garages. You can take your car to the garage if it's not working properly, if it's broken down, and a mechanic will be able to fix it. He'll be able to get the parts and fix that car and get you back on the road. But with electric vehicles, it's quite different because we don't have the infrastructure already in place. We don't have thousands and thousands of garages who are sitting holding parts for these electric vehicles who can just simply patch it up and move it out again. They need to order those parts, and there are stories about people waiting weeks and months for their car to be repaired. They're therefore having to hire vehicles or just be without a car for a long period of time. And once again, this is causing concern amongst buyers. People don't have the confidence that if something goes wrong with that car, they can easily fix it and move on. And so this is another factor that's holding back the mainstream market from buying electric vehicles. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening right now with electric vehicles is really fascinating. And actually, I think there's a whole series of videos in this discussion topic because there are so many things happening at the moment in terms of where this market is going to go. I think from a big picture perspective, everybody buys into the story that at some point we need to stop using fossil fuels because they're highly pollutive, they're damaging to the environment, and electric vehicles look like the future. If everybody moved to an electric vehicle tomorrow, then that would be great in terms of all of the emissions and the potential damage to the globe. But the problem that we've got, as we've highlighted in today's video, is that if we don't have the infrastructure in place to be able to facilitate a wholesale movement to electric vehicles, if we all did go out and buy an electric car tomorrow, we would struggle to be able to find enough charging points to be able to keep all of those cars on the road because not everybody has the ability to charge their car overnight at home. And that's one of the major obstacles in terms of this market becoming mainstream, everybody adopting it. But as we also highlighted, range anxiety, these cars not actually having the ability to go as far as you want them to, and the associated costs of owning an electric vehicle are also holding back people from making that move. And what we're seeing right now is a slowdown in the growth of electric vehicle sales. We've had all of the early adopters who all piled into the market. They bought their electric vehicles. Everybody loves Tesla and all of these brands. They're very cool and sexy. And so you've seen those people driving around. But the next step is for the mainstream market to start buying cars as their only vehicle. There's a lot of people who have electric vehicles as their second car. So they still have a combustion engine car in case they need to do that longer trip. They know that they can just use fuel to keep it going, but they have their electric car for doing the running around town. But what the market really needs in order to maximize its sales growth is for everybody to be comfortable buying an electric car as their main vehicle. And that point hasn't been reached yet. There is still a lot of nervousness about what happens in the future, whether or not we've got enough of these charging points, what happens if my electric car breaks down, how much is it going to be worth when I want to sell it in a year or two's time, will I be able to sell it, will the battery still be sufficient, or will it be deemed to be a write-off and I'll have to just scrap it and buy a brand new one and write off all of my investment. All of these things are weighing on consumers' minds, and that's holding back the growth of electric vehicle sales. And what I talked about at the start of today's video was an incredible listing in the USA of a Chinese business called ZEEKR. And ZEEKR is an electric car manufacturer that only sells in China right now. It does have aspirations to start selling elsewhere around the globe, but at the moment, at the point of the IPO, it only has sales in China. So it doesn't really make a whole lot of sense for that business to be listing in New York. Really, it should have listed in Beijing or Shanghai. But for whatever reason, they decided that they wanted to come to the USA and raise over $440 million. Now, that's a large amount of cash for a business that I would bet most people have never heard of. And what we're talking about is a very, very competitive market where there are lots of new entrants. So we've got all the established car brands, which are all moving into the electric market. We've got all of these new brands that have started up both in China and elsewhere around the globe. And we've also got these problems that we've identified in today's video. And as a result of all of that, we have seen the share price of a lot of electric vehicle manufacturers absolutely tanking over the last 12 months. This doesn't look like a sector that you want to be in. If you'd have put a lot of money into these shares 12 months ago, you would be nursing major losses right now. When the market leader, Tesla, is down significantly, that tells you that there are major problems. And the problem isn't that Tesla have been displaced by another major competitor. The problem is fundamental to electric vehicles. There are major problems that need to be thought through in order to get everybody on the road in an electric car. So the fact that ZEEKR has listed and managed to successfully sell so many shares is astonishing, especially when you take into account the fact that there have been other Chinese businesses that previously listed in New York that we talked about earlier, Luckin Coffee and Didi, both of which ended in disaster for US investors. So it does surprise me, firstly, that ZEEKR came to the US, and then secondly, that there were investors who wanted to buy those shares. It does seem like a high-risk gamble from where I'm sitting, and probably not one that's worth taking given what's going on with all of the other listed electric vehicle manufacturers right now. So the overall summary of today's video is that the electric vehicle market has done well over the last few years. It's grown rapidly. That growth is slowing down as we get to the point when we have to look at the logistical issues facing the mass market. How do we get this market to actually work without people breaking down in their cars constantly because they haven't got enough electricity because they weren't able to charge their vehicle? All of that is a major problem from the electric car manufacturer's point of view. But remarkably, given all of those challenges, ZEEKR, the Chinese electric vehicle manufacturer, managed to persuade the US markets to buy $441 million worth of shares in order to assist with its growth. So hopefully you've enjoyed today's episode, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. If you'd like to see me posting more videos on electric vehicles and all of the issues around this topic, then please let me know in the comments below. But here's something to put a smile on your face.